1 2 1 2 sound check. Okay, the title of this video is wrong. I need to change it. Mm. 1 2 1 2 sound check. Okay, everything is good. Guys, this is the market review and trade review. Not my title of this video is wrong. I said June 11th 2026 CPI gold market review, which is supposed to be June 10th, not 11th. Okay, I'm gonna change that after the live stream is posted. Right now, let me just tell everyone that we are live and invite them for a short session. This is going to be a very quick review, less than 10 minutes. And then we are going to start our trading, live trading on Discord with the bootcamp, 2026 bootcamp. Okay, so guys, here we have gold on a daily. And okay, 1 second. One second. Okay, there we go. So this is yesterday's trade review, and my best case terminus was this low here on the daily, and this low K was formed on the 23rd of March 2026 when we had that drop, huge drop overnight. Not overnight, took like how many days? 1 2 3 4 4 days. 1 2 3 4 2 4 4 days, yes. Trading all the way down. And this was my best case terminus coming into yesterday's trading. And we were trading, I traded a portion of this daily candle, okay? And I'm going to show you what I was looking at on the 15, on the 1 minute, and also the time of day. So obviously everything starts here. Yesterday, 10th of June, we had core CPI. So during on core CPI days, we wait for 9:30, we trade after 9:30. And we in most cases we are going to get a trade after 10 o'clock. Okay, we might find a trade before 10 o'clock, maybe between 9:50 and 10:10, maybe before 10:10, but we find an entry. I mean, before 10 o'clock, but after 9:50, you find an entry. That's a 9:50, 10:10 macro. And that's exactly what happened yesterday. Okay, that's the macro that gave us the entry confirmation. And the entries, the entry that I took came after 10 o'clock. Okay, I'm going to show you exactly what happened. So I was bearish, looking to take it down all the way down to these lows. Now, why did I want to take it all the way down here? Let's look at this high and this low here. We had an imbalance, and looking at the this Tuesday's candle, because yesterday was Wednesday, we had respected that CB inside that range, and that that showed me weakness, and we had already traded and closed strong below the consequent encouragement of this week, because I got my entry. I think we were somewhere just somewhere here, taking it all the way down on the daily move. But let's go down to the lower time frame so I can show you exactly what I was looking at. Okay, let's check the 4 hour. Okay. Boom, 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 boom. Okay, who's calling me now? Okay, 1 second. Yes. Okay. Obligated. So yeah, guys, sorry, guys, sorry about that. And coming into the 15 minutes. Okay, let me just try something again. Coming into 15 minutes, we had already created this high and this low. This was the range that I was trading in. And CPI was somewhere here. Sorry, CPI was here at 8:30. Pushed up, and I was looking at premium of this swing high and swing low. And I noticed this breaker and this fair value gap, which is called a bearish reaper fair value gap. Okay, so if there's a fair value gap inside a breaker, especially if you're bearish, that fair value gap has to be at discount of the breaker. And that's exactly what I was looking at. So this fair value gap here, and just the whole breaker included, that's what I was focusing on. So you can see here, this is the breaker, and that's the fair value gap inside the breaker. Look at the body staying inside the reaper right there. Now I'm gonna go ahead and remove that breaker, and I'm gonna leave this reaper here. So after 9:30, price open, pushed higher, and then we took out the pre-market range, relatively equal highs here. And then I'm going to show you that what that looks like on the 1 minute. And then we started dropping after 10 o'clock, and I was in the trade as soon as we closed bearish here. That's when I went, as soon as we crossed the inversion, because there was an inversion on 5 minutes, that's when I went short, taking it to this daily low that I pointed out on the daily. Okay, let me show you what that looks like on the 1 minute. So this is the same reaper, that ICT reaper fair value gap. So on 1 minute, we opened here. This was CPI. Now, this is very important information, eh? Very important information. 7 o'clock we opened, left relatively equal highs there. We did not take out any high after 7 o'clock, so that I kept that in mind, okay? And then it went all the way down. Now at 8:26, 8:27, we made the low. 8:30 we opened, and we did not take out any external range liquidity. So external will be above and below the pre-market range highs and lows. Okay, so we just extended, we went up to premium, and we only took this internal range liquidity here, sweeping those highs inside that range, and then we started dropping. And I said to the guys on stream, we might have a continuation, because we might not want to free these guys who are already trapped with this move higher. So I was tempted to go short as soon as we opened after 9:30, when we closed bearish after, feeling this fair value gap at premium with this week, and then dropping. I wanted to go short, because of, I understand the sentiment, I understand what the market makers want to do with these type of events. So if they create a high like this, and they don't want to trigger, resting sell orders or buy stops um above, they might just leave them hang like that. Like, excuse me, I might not be making sense to you right now, but these highs here, this high and this low, you you need to understand when price will not come back and trade to and through these highs, the data highs and data lows. And yesterday I thought that was the case. Okay, I wanted to, because I was bearish like that. So sometimes when I'm bearish, um when I have a strong bias, not bearish, when I have a strong bias, I tend to overlook my model, and I not overlook my model in a way, but I do not demand more confirmation when I execute trades, and that's how I lose. I've noticed that with myself, when I have a strong bias, I lose easily, because I am easily fooled by anything and everything. So, and yesterday when we opened, took out this so relatively equal highs here, internal relatively equal highs at premium of the pre-market range. I started thinking, okay, maybe we might have a continuation, after 9:30. So I wanted to see, because we had already closed bearish up below this inversion. We've already inverted this guy, and then I wanted to see 9:30 price in that premium, and the premium for me was from this high, between this high and this low. If we cross this, that's premium of the equilibrium. I mean, it's a premium of the pre-market range, sorry. And we had this fair value gap situated at premium of this. Sorry, guys. There we go. So we crossed it right there. And when we formed the change in the state of delivery, I went short initially here, because I thought, okay, maybe they're going to be quick to manipulate the people who are already long during CPI, and just dump all this to them, and everyone who was trying to trade a breakout or trade this to catch a momentum here will be liquidated, going all the way the opposite direction, all the way down here. I thought that was it, and I took a loss. And then I said, okay, no, let me wait and see if they want to take out the pre-market range highs, which they did. Retested the midnight open, and this was actually initially what I was initially focusing on. And I actually wanted to go short after this happened, but I got easily fooled because I had a strong bias here. So I took a short entry, and I got a first loss. And then when we went all the way up during that macro, 950 to 1010, looking at how the 15-minute candles were closing inside the Reaper. Again, let me show you what that looks like. This Reaper here, looking at the bodies wicking and closing inside the Reaper, and then closing below it like that. I could see that there was resistance there, and that's when I saw this, because I initially saw the change in the state of delivery when this candle took out that high, and then it dropped, closed below that last up close candle. I didn't want to take that because I was already not too sure. I was looking at Dixie at the same time. It wasn't giving me the confirmations I was looking for. So I said, I'm going to wait for 10 o'clock to open and give me some strong shift or displacement towards the downside. And that's I got that. And when this candle closed, I went short. But when this impulse move quickly went up again, and I hadn't actually noticed this inversion fair value gap by then. I only noticed it when it was this candles here. So I closed the trade. I was like, okay, because Dixie hasn't given me the confirmation yet, because I was waiting for a bullish change in the state of delivery on Dixie. I closed that position before I could hit my stop loss here. And then I said I'm gonna wait for 10 o'clock to give me some sort of displacement again, a change in the state of delivery. Actually, no, I did wait for 10 o'clock to give me that displacement here, and I closed with this candle, not this one. Sorry, I'm making a mistake. This was the candle I closed. When it reversed immediately like that, I was like, okay, let me wait for Dixie. And then Dixie confirmed, I went back in, I think somewhere here. That's where I went back in, and that those are my positions, and I used this high as my stop loss, because it took out that buy side liquidity, reclaimed that inversion after 10 o'clock, and there was a change in the state of delivery, and this was my entry, and I took it all the way to this daily sell side liquidity like that. That was a 5 point something hour. Actually, it was more than that. I think it was a 6 hour or something, 6 or close to a 6 hour. Let me put this here, close to a 6 hour, and this was my position, and I added more positions here, and I think I added another position right there, and I just left it because I could see that we are at premium, and my implied dealing range was obviously this was my implied dealing range from that swing high to this low. The equilibrium was here. Let me do this, extend to the right. That's why I have a breakaway gap here. This confirmed that, okay, we are going to make it to this low, because we left a fair value gap open at the midpoint, or at the equilibrium of this implied dealing range. And I like to see this fair value gap stay open like this. And I kept saying it on the live session. I said, guys, once we close below this basic here. It wasn't inverted here. The body is closed bearish down there. If you zoom in, you can see that. And then I said, okay, now I don't want to see a fill. I don't want to see it stay open like this because I knew it was at equilibrium of my implied dealing range, and that's confirmation that I'm going to get this right here. And that was to trade. I'm now going to show you the execution. So I took partials because I could see that I didn't have the patience to wait for it, till it takes out this. It took time. It took a lot of time, So I closed some partials here, 80% off here. Then I left the 20% to run, and I took everything out down here. So guys, this was just I'm going to show you again what 5-minute time frame looked like, and you can see the confirmations I was looking and getting on the 5 minutes as well. Okay, so I have this bearish breaker here. Let's refine it. So here I like this inversion on 5 minutes. When we closed bearish like that, I like that. And also here, when we closed bearish, these were my confirmations. I really liked seeing those, and it was just a smooth ride going all the way down. And I'm now going to show you my position. Okay, it's almost time. I need to go live with the guys. These are my executions. The first trade that got trailed out somewhere here, and then these were the trades that sealed the deal. Not risking much, risking less than 10% or just 10% of the trade, which is, for me, that's not too much. I can even go up to 15% sometimes. Yeah, with my model. If it's a small account. If it's a big account, I keep it at 5% max. Flowing next. So here I was just trading my stop losses, not rushing to go break even with it, just putting it at logical senses. Logical levels, sorry. Flowing nicely. And I didn't initially take partials at pre-market range lows because I was that bearish, and I could see it punching all the way down. Two partials there, and I left those runners, and you can see the time, it was really late by then. And price was somewhere here. It went all the way, and then boom, it took out those. And you can see the charts, the SPR, on the bootcamp, 1026 bootcamp. I was showing them the executions, and you can see the balance right there. So guys, that's it for today. I hope this was insightful, and I'm now gonna go on and be live with the guys for today's trading session. And yeah, guys, so I hope this was insightful. I'm actually running out of time now. I don't have time. I need to be live already by now. It's after 8:30. So yeah, guys, let's just quickly look at today's price. $1 million model execution, late for today's session, guys. Actually, this is going to be a continuation. Maybe we already missed a trade. Let me see. 8:30. Where are you? We haven't missed it. It's okay. Okay, guys, I'll see you on tomorrow's or later today's market review, if I will post another one. Hope this was insightful. Ciao, ciao, ciao.